Everyone talks about moving averages, but let's be real, most traders, including myself, do not actually know how to properly use them to win. That's why today is different. I'm breaking down how Jlaw, a US investing champion with a triple digit return, actually uses moving averages. Also, PS, just a side note, it might sound like I'm saying Jlaw, but I'm saying Jlaw. So in this video, if it ever sounds like I am saying Jlaw, please forgive my pronunciation. So let's begin. Let's go. The first thing to know is which moving averages does Jlaw pay attention to? So his core set is simple. It's 10, 20, 50 and 200. And sometimes he'll also add the 63, 150 and 250, but mainly on daily charts. Why those? Because they often line up with big picture structures like quarters, 30 weeks or a full trading year. So if sometimes the 10, 20, 50 and 200 does not make sense, then the other ones do. But the truth is, most of the focus is on these, the 10, 20, 50 and the 200. Now here's something important. He never says 10 day, 20 day, 50 day or 200 day moving average. Why? Because on a weekly chart, the 10 isn't 10 days, it's 10 weeks. That's why he simply calls it 10 MA, 20 MA, 50 MA and 200 MA no matter what the time frame is. So what do moving averages actually do? According to Jlaw, a moving average is simply a trend line that adjusts itself. In practice, it acts like a support and resistance, but not like a fixed level, more like a zone. Think about it like this. Sometimes price bounces exactly on the line, sometimes it dips below and then bounces, and sometimes it reverses just before touching it. And once price breaks through cleanly, that MA can actually flip roles. The support becomes resistance and resistance becomes support. The big takeaway out here is a moving average is not a magic line. It's just one piece of context. This brings us to the biggest lesson that Jlaw teaches us, which is context is everything. A stock touching the 200 MA does not automatically make it a buy. For example, if Tesla hits the 200 MA, but the overall market is still above the 200 MA, then Jlaw won't touch it. On the flip side, if a strong stock pulls back to the 10 MA or the 20 MA, that could be actually the only chance that you can get in. Miss it and the stock may never come back there again. So here's the truth. Don't always believe the textbook stuff, like the 50 MA is a good support to buy at. Instead, always check the market context and the stock's strength. So how does Jlaw actually use the moving averages to enter the trades? Jlaw loves it when a strong stock pulls back on low volume at the 10 MA or the 20 MA. That's often his favorite setup, and this is the key. He never enters just because of the MA. He looks for confluence, what he calls the multiple edge trading area or meta. That means he stacks multiple edges together. Maybe a trend line support, maybe the prior resistance flipping into support, maybe even a moving average support. When multiple edges line up, that is the time when he actually acts. Now, I did a quick recon on his M.E.T.S framework. The M.E.T.S, he calls it multiple edge trading strategy or multiple edge trading style. I took a screenshot from one of his videos and tried to decode it. So I'm actually laying down the 9 advantages, what he actually looks for. And I hope I have this right. The first one is momentum and trend. Second, support and resistance. Third, change of structure, price action and volume. Fourth, MTF is multiple time frame. Fifth, relative strength. Sixth, risk, reward and stop. Seventh, broad market edge. 8th, favorable time. 9, market imbalance. Now again, I hope I have this right because I just converted this from just the letters from a screenshot. And if Jlaw students or Jlaw himself is watching this, then I deeply apologize and you can comment and correct me on this. Now let's talk about exits, because this is where most traders struggle. Jlaw uses 2 main exit strategy. The first one is sell into strength. That means taking profit whilst the stock is still rising, usually into a resistance zone or after a big run where the profits are several times the original risk. You can sell part of it or all of it according to your own risk tolerance. The benefits of this is that you lock in gains early. The downside is basically the stock sometimes keeps running and you miss out on the big move. The second one is sell into weakness. This means holding it as long as the price respects support and only selling it when it clearly breaks below a key level. Maybe the 10 MA, the 20 MA or a trend line. The benefit is that you get to ride the stock much further. The downside, you might give a large chunk of your open profits if it falls too soon. Jlaw also often uses a hybrid approach. He trims into strength and lets the rest run until weakness. That balance actually really worked for him in the US Investing Champions, where he did a plus 353% return. One simple thing he emphasizes over and over and over again is that don't put your stop losses exactly at the moving averages or support levels. You'll almost get shaken out by the normal noise. And the second one is only risk profits, not your principal. At the start of each year, Jlaw builds a small cushion of profits for himself and then uses that cushion to finance other trades. That way, even if a trade fails, he's never cutting into his core capital. So here's the bottom line. Moving averages aren't buy or sell signals. Second is they become zones of support and resistance when the overall context is in place. Third is that the real power comes in when you combine these with the other edges. It could be trend line, volume, relative strength, and overall market context. And that's how Jlaw, a two-time US investing champion, uses moving averages. Now, I actually have a full breakdown of his video of all his trades which he did in the US investing championship, and I have converted that into English. The only thing is I'm still waiting for his permission. I've emailed them on Instagram, I have mailed them on Gmail, and once I do get the permission, because I want to do this right, then I will publish it freely. But if you don't want to wait for that, then again, I highly recommend you guys to go on his channel and actually watch that video. The whole thing is in Chinese, it does have English subtitles, but they're either lagging or they're broken at some places. So you'll have to do some manual work out there to convert the content. Or the simpler way is just wait for my video to come out. Now, if you found this breakdown useful, then please do me a favor. Please do hit the like button and please do subscribe, because this takes me days to put together. And your support is the only thing that actually fuels me to go ahead and produce content like this. Also, another thing of you subscribing is that I keep deep diving into topics like this, whether it's the champion traders or trading book theories and other kinds of knowledge related to investing and trading, then this channel could be really useful to you. It's broken down simply with a smile. So please do subscribe.